What if I told you? The US government holds over $23 billion in Bitcoin. FedEx just joined Hedera governing council with Google and IBM. Japan is issuing XRP-powered bonds. AI demand is literally wiping out hard drive supply, and experts are warning of a violent stock market crash. Oh, and Bitcoin might drop to $10,000. This is 2026, where everything is bullish and terrifying. At the same time, let's break this down without the hysteria.
Blockchain just went enterprise.
When FedEx joined the Hedera Governing Council alongside Google and IBM, that's not retail hype, that's infrastructure. Corporations aren't buying crypto, they're building supply chain tracking, settlement rails, compliance systems, and HBAR pumped on the news. But here's the bigger story. This is slow, boring adoption, the kind that doesn't disappear in a bear market.
The chain wars are ending.
Cardano might integrate with Solana. Yes, you heard that right. After XRP bridged over, now Cardano and Solana are talking interoperability. Support from Charles Hoskinson, an American entrepreneur, mathematician and blockchain pioneer, co-founder of Ethereum, and founder of IOHK and the Cardano blockchain platform, and Anatoly Yakovenko, who is a Ukrainian-American computer engineer and entrepreneur, best known as the founder and CEO of the Solana blockchain, and the inventor of the proof of history, POH, consensus mechanism. Translation: the tribalism era is dying. Liquidity wants bridges, developers want users want speed and access. If chains connect, the real winners aren't maxes, it's the ecosystems.
Governments are stacking.
While pundits call crypto useless,
The US government holds more than 328,000 BTC. Brian Armstrong says every major government will build a strategic Bitcoin reserve. Arizona moves toward an XRP reserve. Japan deepens XRP banking partnerships. And yet, Neil Kashkari, an American banker and economist currently serving as the president of the Federal Reserve Bank of Minneapolis, says crypto is utterly useless. You see the disconnect? Public narrative equals skeptical. Balance sheets equals accumulating.
Wall Street is repositioning.
Harvard University just cut Bitcoin ETF exposure by 21% and built an $87 million Ethereum position. That's not bearish, that's strategic. Bitcoin equals monetary hedge, Ethereum equals tokenization engine. Meanwhile, ARK Invest, led by Cathie Wood, is buying Coinbase again and loading up on AI megacaps. ETFs are bleeding, whales are selling, institutions are reallocating. This isn't chaos, it's rotation.
The crash narrative.
Let's address the elephant in the room. We're hearing violent stock market crash incoming, debt spiral risk, recession probabilities rising, tariff drama, Bitcoin to $10,000. Strategy says it can withstand a Bitcoin price drop to $8,000 and still cover its roughly $6 billion in net debt. But here's the twist. Bitcoin mining difficulty just jumped 15%, the biggest increase since 2021. Miners aren't unplugging, they're doubling down. Markets can drop, infrastructure doesn't. This one is wild.
XRP's quiet takeover? 11 companies adding XRP to corporate treasuries. Ripple spending nearly $3 billion on acquisitions. On-chain bonds issued in Japan. Banks collaborating on blockchain payment rails. Stablecoins launching on XRPL. Ripple and XRP are always making moves.
Is XRP replacing SWIFT? Or is it just becoming the plumbing underneath global payments? The loudest coins aren't always the most integrated.
AI is eating everything. While crypto fights on Twitter, AI is consuming. Data centers, semiconductor production, Western digital hard drives sold out due to AI demand, energy infrastructure. Japan is testing wireless power transmission from space. China's humanoid robots went from viral stumbles to kung fu flips in a year. Toyota is hiring humanoid robots. Mexico unveils robot dogs for World Cup security. And OpenAI is nearing $100 billion funding.
This isn't hype. This is industrial transformation.
Gold, BRICS, and de-dollarization. Gold analysts are calling for $6,500 per ounce. BRICS nations are pushing alternative settlement systems. Binance is hitting massive precious metals volume. Anonymous donor drops $3.6 million in gold blocks to fix Japan's infrastructure. Yes, really.
When gold and Bitcoin move during geopolitical stress, that's capital hedging systemic uncertainty.
How to stay level-headed.
Here's the truth. 2026 isn't a bubble, it's a restructuring. Centralized transitioning to tokenized, analog transitioning to AI, paper assets transitioning to on-chain assets. Volatility is the toll booth. If you're high risk tolerance, you already understand this game. But here's how you stay sharp. Don't panic trade headlines. Keep some cash on the sidelines for corrections. Diversify across themes. Hard assets think gold, silver, real estate. Smart contract ecosystems and payment rails think Ethereum, Solana, Cardano, XRP, XLM, or HBAR. Store of value think Bitcoin, other select cryptocurrencies, and art. Think AI infrastructure. It's not going anywhere. Traditional finance think stocks and bonds. And keep an eye on Quant, QNT, which is a blockchain interoperability platform and cryptocurrency designed to connect multiple blockchains and enterprise systems. Also, think 3 to 6 years out, because when governments accumulate, corporations integrate, and banks tokenize, the loud crashes might just be resets.
Not financial advice, and do your own research. So ask yourself,
Are we in a bubble, or are we watching the foundation of the next financial system being built in real time? Comment below, crash coming, or generational opportunity. I often dollar cost average and take advantage when the market dips. Invest and exit your positions wisely. And if you want real analysis without the emotional roller coaster, subscribe, because 2026 isn't slowing down, and neither are we. Peace.